Venkatesh Vijayaraghavan is joining us. He's Chief Executive Officer at TTK Prestige. Mr. Vijayaraghavan, a very good morning to you and great to speak with you. Let's begin with, what the quarter gone by has been like. And I know it's been a while and we'll start talking about quarter one in a bit. But I just did see that Q4 and year on year has been a bit of a strain, slightly, some degrowth in net profits, margins also down slightly. Do you see the outlook changing, especially on the EBITDA front?
Yeah, so I think the industry has gone through a little bit of a slump over the last couple of quarters in particular. We do see a revival, but that's a couple of quarters away in my mind. And there's been a stress around consumption. This probably is leading to the numbers that you're looking at this point of time. If you were to look at our journey, we've been very clearly focused on building our margins, being able to utilize our assets a little more strongly. We haven't played the dilution of price game too much to drive short-term growth. And probably that's one of the reasons that you see this pressure coming in. But we do believe as the market starts moving up, the bottoming of the market happens and this market starts moving up, we would see the growth come back aggressively.
Do you have a sort of a view by when you see that consumer sentiment improving? And the reason I ask is, at least on the FMCG front, which also is a good gauge of consumer sentiment or rural consumer sentiment as well, they are seeing green shoots. I'm wondering if you're observing any of that or it's a bit of a wait.
It's a bit of a wait. In our view, it's a bit of a wait. While we do see certain areas coming back again, but I think at a broad level, we do think it's going to be a wait, as I mentioned. I wouldn't hazard a guess in terms of the timing, but I think we're still yet to come out of the bottom yet.
Mr. Vijayaraghavan, is there, I've seen a few of the competing firms try to do what you've done successfully thus far, which is set up multiple points, creating the pan-India presence, the branding being done in that fashion, just trying to think of, one, the competitive intensity, and two, what are you doing to counter that?
So rightfully so, when you've been successful and you've got a successful model, you should expect that there would be competitive pressure coming in terms of aping the model. We follow it in two phases. We continue to stay invested in our retail business, which is our retail front end. We've got close to around 700 stores across 371 towns, and we continue to keep expanding that presence. That very clearly gives us, one, a direct connect with the consumer. Two, I think it has been helping us to be able to launch a number of our new products very successfully. As we move forward, we're expanding our presence not just in the metros alone. We're deepening our presence in the metros as the metros start expanding, the big towns and the big cities are expanding. We're also going into tier 2, tier 3 towns as well. So our geographical presence by way of our physical stores, branded stores, exclusive, you would see that expanding as we move forward. We do believe that there is space for the market, and therefore we follow the process of sticking on to what is good for us and continue to expand this particular channel. As far as competitive intensity is concerned, I think we are seeing that happen. The industry is seeing a lot of players coming in, entry barriers being low. The challenge for us as leaders is to continue to lead innovation, lead some of the new practices that the company is known for. Over the last few years, we've seen the company has been leading a lot of thought leadership for the industry, a lot of innovation for the industry. And that's something that we would continue to stick to as our core. And as we start ramping up our new product launches and as we start pushing our stores expansion, we do see that we would be getting growth, probably ahead of the market.
All right. I was just seeing your agreement with GramyaHaat Rural Tech, and it's a small sort of a move. It's the total commitment of orders only 15 crores. But I wanted to understand the strategy behind it with this particular company, and also about your Judge brand catering to the lower price segment. Is that now something that you want to double down on? Because premium is somewhere where you do have strength already.
Yeah, rightfully so. I'll take up the Judge question first and probably go to the acquisition. So we do believe that there is scope for multiple brands to exist in this category. The category is actually seeing, the categories we are present in is actually seeing two types of emerging trends. Premiumization at the top end, and there's also participation from the mass market as well. So we do believe that there is scope for two brands to coexist, and our efforts on Judge in the last few quarters have been accelerated further, and you would see that acceleration happen. So on the top end, we have Prestige, and probably at the mass market level, we would play around with Judge. But we are quite clear that the two brands would have their own individual existence and do not cannibalize each other.
All right. Thank you so much, Mr. Vijayaraghavan, for speaking with us this morning. And I thought it was interesting where everyone wants to go premium. You're also looking at, the lower end of the market as well.